Good morning, good afternoon, and good day. Welcome to today's webinar, 5 Questions Every CFO Should Be Asking Their Controller. My name is Ben Kang, and I'm with Sage Intacct, the leading provider of best-in-class cloud financial management software. And since our inception, we've helped thousands of mid-market CFOs and finance organizations effectively manage growth. And during today's webinar, you'll hear examples from the collective experiences of 2 of our customers as to how they work successfully with controllers. We welcome all questions and comments during the webinar today. And what you'll want to do is go to the panel where it says Q&A to post your question. And we have set aside some time at the end to discuss anything that's on your mind. And we'd like to try to keep this as interactive as we can. We'll try to address all questions during the call. And if for some reason we cannot get to the questions in the time that we've allotted, we'll follow up after the event, and we'll also be distributing a copy of the recording afterwards. So in a moment, I'll ask our guests to introduce themselves to our audience today. But before doing that, I just want to share today's agenda with you for your informational purposes. That after the introductions, we'll basically dive right into the 5 questions, and then we'll close with some summary and additional resources that can be made available to you. So without further ado, let me take this time to present our guests for this webinar in alphabetical order. We have Israel and Andrew. Israel, please say hi to our audience and spend a few moments talking about yourself and your company.
Hey, it's good to be on this afternoon, and I've been the CFO here at Emission Monitoring Service in Houston, Texas for about 7 years. We are a mid-size environmental services company. We have operations all around the U.S. and in China.
Okay, great. Andrew, please say hi to our audience and say a little bit about yourself, please.
Hi, everyone. Andrew Peace here. I'm the CFO of Brighter. Brighter is a health information technology company. We focus on driving member experience solutions in the dental space until December 14th, when we were acquired by Cigna. And so now Brighter, in collaboration with Cigna, is working on transforming Cigna's digital presence for the good of all of its members.
Excellent. Thanks, Andrew. So before we get on to the first question, I'd like to take a quick poll from our audience. And this poll kind of has to do with the time of year that we're in right now. And as some of you may be experiencing, a lot of the companies that we work for have December year ends. And if we think about what happens at year end, it's obviously our famous annual audit, or maybe infamous audit. And so before we get into the first question, what I'd like to ask everyone in the audience to answer is really to be posed how you feel about your upcoming audit. And it's a simple question. Yes, no, or not sure. And the question is, I am confident that our annual upcoming audit is going to be clean. So let's just give our audience a few moments to answer, and then let's take a look at the results before we move on. And let's look at some of the results. And it looks like we've got a good representation of people who feel that their annual audit is going to be clean. So congratulations to those of you who are in that category. That's a nice feeling. And then we do have a few who aren't as confident, and we'll get into that in just a moment. So while we're on the subject of audits, the first question, what are we doing in preparation for our upcoming audit? Israel, you introduced first. So Andrew, why don't you take a crack at this question? What goes through your mind when you think about preparation for your upcoming audits?
Sure. I think what goes in mind when preparation for my upcoming audit is really about the monthly process that we have set in place so that there really, in a way, isn't any preparation for the upcoming audit. That means that everything in terms of backup support and all the files are in such a place that when an auditor requests them, they're very easy to pull and give that information. So if you've been through an audit once, there shouldn't be any reason you don't know what they're going to request, and therefore I've instituted everything that gets requested as part of kind of our monthly process close review, and handle it that way.
Yeah. Thank you for that. Israel, what goes through your mind when you think about the audit preparation?
The only thing I would add to what Andrew said is looking at things that have changed, especially in regard to any kind of accruals or deferrals. Those are usually the areas where things can kind of slip through the cracks. And so I'll look back at how we're doing estimates regarding deferrals and accruals, make sure we have good basis for that and backup and methodology documented on any of that. And at the same time, I would take a look at some of the controls and especially where we've had some system changes or procedure changes. Look at how that could have been impacted. I mean, a simple big example would be if we have a new payroll provider we're using, looking at whether we addressed all of the different changes that could have impacted the way that whole process goes. I mean, ideally, of course, we would have done that right at the time, but it's always good to maybe take a look back at, make sure we've documented all of that and reviewed the process and any of the possible cracks that could have been left.
No, definitely. How to tackle those changes is something that I'm sure that comes to mind. A follow-up question I'd like to ask both of you, since you've both worked at other companies previous to your current organizations. Oftentimes when you come into a new role, especially when it comes to processes, you inherit processes that were there before you got there. And, for better or for worse, these processes, they're now yours, if you will. And sometimes they may not be the way you'd like them to be. And it can have a big impact from your day-to-day perspective as well as how you want to run and manage your departments. So when you do have these changes or, when you're new in your positions, can you each comment on, how you approach changing things that may not be where you like them to be, especially when you think about something like an audit? Andrew, could you comment on that first, please? Mm-hmm.
Sure. So I think when you talk about changes and you come in, an audit can actually be incredibly helpful if it depending on the timing of your audit.
Yeah.
I actually had the good fortune in my role previous to Brighter that when I started, basically the audit was going to kick off.
Wow.
What that will find is help you find is the deficiency in your partners. And you can really use the audit team as a partner in that respect and really see it as a true partnership where your guys are working together to help improve the operations. Outside of that, in terms of making change, I think it's really critical to make sure your team knows that what you're trying to do is make their job more efficient and more effective. You're not trying to give them more work, and that your goal is to make these processes better overall so that they aren't having to spend their, waking hours at midnight trying to make sure that the auditors have the information they have because they didn't do the work up front.
Yeah. Yeah, for sure. Israel, how about you?
I tend to think about cash flow a lot in terms of what should get priority. So if there's a process that is a big part of cash flow, which can be things related to billing for us or related to payroll, those are the two areas that I tackled aggressively when I came in because they have big impact on cash flow, where most of our cash out is payroll, and most of our cash in, of course, is the billing to our customers. And so the processes around that really had needed to be revised significantly, including implementation of new systems and so on. And so the cash flow implications are big for me.
Yeah, no, for sure. That's definitely important. Okay, last follow-up question before we move on to the next one. Both of you are obviously using Sage Intacct systems, and both of you had talked about the need to have efficiencies and processes when you prepare or have the kind of audit outcome that you want. Can each of you just talk about maybe one or two things about your current system that you feel is a benefit to you when it comes to audit preparation? Andrew, would you like to go first?
Sure. So one key thing is the AP tool and being able to integrate the billing into the AP tool and pull up invoices as needed and everything like that is pretty critical, because you can tie the entry into the GL directly into the actual invoice that's causing it.
Yeah.
So that's very helpful. The other thing that's very helpful is the subledgers, so that you don't have to manage them offline, which creates the ability for errors and mistakes and things that don't tie to the GL. So things like the prepaid subledger in terms of booking automated amortization, things like the fixed asset subledger, which we actually don't use because we don't have enough fixed assets to justify it. But if we did, we definitely would be using it, because that's another area of error that you can be prone to make, but with the Intacct solution, you don't have to worry about that.
Thank you. Israel, how about for you?
I'm actually just implementing the fixed asset module right now, and I had for quite a while for the same reason that Andrew mentioned, was we didn't quite have enough that I feel it was justified. But as time has gone by, I've seen enough justification for it that we're implementing it, and those kind of implementations really do help a lot in terms of tying transactions together, where you can drill down into where what the source is of this. So attachments are huge. It's very, very easy to look at a transaction, but without the documents that go behind it, it's just numbers typed into a computer. So that feature is very convenient and very, very nice, including on journal entries and everything.
Yeah, no, for sure. That's good to hear. Okay, thank you both. Let's move on. So before we get into the second question, I'd like to see what our audience is facing when it comes to something that's different from the audit, but still in the similar space, and it has to do with the close process. And so the question that I'd like to ask the audience is, how long does it take your finance team to close the books? Does it take less than 5 days? Does it take 5 to 10 days, 11 to 15 days? 16 to 30, or over 30. So let's just give everyone a few moments to answer. And just a few more moments. Okay, and let's take a look at the results. So it seems like we've got a pretty fair distribution of companies that are able to actually close in less than 5 days. That's phenomenal. Congratulations. We've got about a third of you, about 5 to 10, and a number of you from 11 to 15. So it seems like the vast majority of you are able to close your books within 15 days. And so let's talk a little bit about that. So in terms of the second question, that we think a CFO should ask a controller. That would be, how can we close the books faster than we currently do? So Israel, why don't you take this one first? When it comes to the close process, what is the thinking behind the number of days that you try to shoot for?
Okay, well, my thinking starts with, just taking a look at the time it takes to get transactions created or estimated and then entered, reviewed, reconciled. And I think it's different from firm to firm, what is involved in the big transactions that are happening. And there's always a trade-off between estimates or accruals and actual transactions. For our company, I tend to lean toward being a private company and having some flexibility there. I tend to lean toward waiting for some things that come in with some delay to get transactions created instead of estimated, because I feel like that ends up with reporting that's more meaningful to us in managing our company. For us, it has to do with having to work with our customers and getting sign-offs on things and getting gate log information and various different things to make sure that our invoicing or our billing is actually correct before that gets finalized. And so when our expenses tend to come in pretty timely and get posted, and they're fairly simple. Our payroll's pretty sharp, and it's really around our billing for us. So software can speed that up. You can speed it up by hiring more people in different ways. So for us, being a small firm and using temp labor wouldn't be very good. So those are all the factors that come into my decision to end up closing, about 20 days after the end of the month.
Excellent. Thank you. Andrew, what is your thinking when it comes to the ideal cycle time for closing the books?
Yeah, so I'm a little bit on the flip side of that. Most of what we do focuses on data and metrics that you want to be kind of readily accessible early on and be able to forecast out future periods. And so we focus on a quick close. My big thing when we talk about closing the books faster than we currently do is always how much can we do pre-close, how much has to happen post-close, and making sure that people aren't sitting there waiting to do things that could be done, could be done later, or could be done earlier.
Yeah.
But yeah, I mean, primarily I follow the kind of the 90-10 rule, which is as long as, actually it's really more like 95-5 rule, which is as long as we're within 5% on our accruals and those kinds of areas, then we're going to be okay. Then we're pretty comfortable, and it's really more important to have that quick and be 95% correct on the accruals, and therefore 99.5% correct on the entire financials, and have that correct so that we can move forward with our forecasting process as quickly as possible and have the most timely information for our senior team as possible to make decisions.
Thanks, Andrew. Israel, one follow-up question for you. You'd mentioned there are some interactions with customers that need to take place. So can you talk about what are some of the things that can hold up your close? And then maybe if you could give some background as the kinds of transactions that you do, maybe as they relate to projects. Is that something that you can share with the audience, please?
Yeah, absolutely. So some of our customers have a process where they want a monthly invoice. They don't want weekly. They don't want biweekly. They only want it monthly. So you got a lot of labor, and you got some materials maybe coming in there. So at the end of the month, you're able to create that invoice. Once the timesheet, we do weekly timesheets. So when the timesheet's been closed out, which can be a few days after the end of the month, and then you can actually produce the draft invoice. Then you have to actually send it to the customer for review. It's a bit of the nature of the business, so that's why I said it's very specific, industry specific. It's their expectations to kind of have the right to review that, and if they feel like some of this was not right, or they have reasons to think that this shouldn't have been billable, or this and that and the other, it can be a little bit of a negotiating period, if you will. and then that becomes a final invoice. So that can potentially sit on their desk for a couple of days. They haven't got around to it. Then you're kind of trying to get that back and close it out. We have a big volume that's the same. So what we have is a lot of cyclicality in our billing, and that means that we would have to staff to get that done fast, or we go ahead and say we kind of take the trade-off and say we're going to go ahead and do it throughout the month, even though that's going to mean a later close.
Got it. Thanks, Israel. Andrew, it sounds like you've got a pretty streamlined process, but whether it's your current company or maybe other ones, what have you seen hold up your close?
Yeah, I mean, I think the biggest thing that will hold up a close is actually the lack of automated processes. If you have a bad, say your credit, we have a credit card, right, that basically handles, I would say, 95% of our vendor transactions. And if you don't have a good process for ingesting all of that transaction data in a good way, that can hold up the close, the coding for it and all that kind of stuff. That can definitely hold up the close. Small things like, poor treasury management can cause a lot of issues on bank rec considerations and that kind of thing. But in general, we try to avoid those issues here so that we can make it happen as quickly as possible.
Awesome. Thanks, Andrew. Okay, let's move on. So this next question, we've been talking about the close process, and some of you out there, depending on the processes and systems that you have in place today, what we've seen at Sage Intacct is that there are a number of accounting departments that rely heavily on journal entries. And when they do these journal entries, they tend to be manual transactions, if you will, and that these journal entries can also be very large amounts. So you can think of them as batches. It's a very large dollar amount that might, mask or hide some granular detail that some other people may not or may want to see. And so when it comes to journal entries, the question that I have for you gentlemen, and it'll depend on the processes that you have now or maybe what you have seen in other places where you've worked, but when it comes to journal entries, have you ever been in a situation where it seems like there's too many manual journal entries? You can't eliminate them entirely, but does it ever seem like that there's too many? Andrew, do you have any thoughts on this one?
Yeah. My point of view is that the goal and the mantra should be that one many is too many. But like you said, you're never gonna get there. So we always talk about that goal and talk about what needs to be manual, what doesn't. And usually manual journal entries should primarily only be on the accrual side of the house. Otherwise, you're kind of much more prone to error. So that's where we try to make it done. On the primary side is our accruals are the major manual journal entries that we focus on.
Okay.
Knowing
Thank
that
you.
You can't avoid those.
Yeah, for sure. Israel, how about for you?
I may be taking a little broader perspective of a journal entry, but I look at as kind of a spectrum, but three main sort of categories, like fully manual, semi-manual, and fully automatic. And fully manual to me means, you have some kind of source information, paper documents or whatever, and you're just typing stuff in to your ERP. Semi-manual to me would be like for example, downloading data from one system, doing a reformat, then importing it into Intacct. There's a bit of a process there, and you could have some consolidation that happens maybe, but it's not fully manual. And like fully automatic would be, for me, like if it's coming from one entry system and directly pushing into the general ledger of our ERP. And so an example of that for me with Intacct was to bring a system of kind of fully manual entry of our time and labor into a fully automatic state. So timesheets get entered directly into Intacct, into the ERP. The labor is directly posted, as well as statistical journal entries, as well as things that directly feed into billing. So that was an example for us where Intacct brought us from fully manual to fully automatic type of an entry, and had huge impact for us.
Yeah. No, that's definitely supposed to be helpful, and I'm glad you're able to benefit from that. One follow-up question for each of you. So when auditors see manual journal entries, it's not unusual for them to detect errors. So do you find that there's a good likelihood that doing journal entries manually is going to lead to errors? And if that's the case, what do you do, or how do you go about preventing them or controlling for errors from happening? Andrew, do you have anything that you can share on this one, please?
Yeah. The biggest thing is in terms of making sure that we don't have errors in our manual journal entries is a review process. Pretty stringent review process on that. The person who creates the journal entry, usually gets approval on it before it gets booked. That's kind of one key thing, so that we don't have to do it. The other key thing is the backup schedules that reinforce it, and making sure that those make sense and are easy to review. Therefore, during the close process, it's easy to catch any errors that would occur.
Yeah. Good. Israel, what do you do to, you and your controller, how do you like to keep errors at a minimum?
What I do, it's pretty old school, I guess, as having a written procedure and an actual checklist, so
nice.
that there's the repetition of the work is consistently done, and a person who follows through on a checklist and saying, yes, I did that, and yes, I did that, tends to make less mistakes, myself included. And so that's something that we have implemented pretty broadly.
Yep. And last question on journal entries. Some of the reasons why these journal entries have to be done, one of you made a mentioning of a source system. So oftentimes the information that you rely on to close your books and do your reporting is information that sits in another system. So you can think of these as maybe having to deal with disparate systems. So when you have disparate systems in your companies, how do you get the level of comfort that you want in terms of making sure that the information from those disparate systems are being captured correctly when you close your books? Israel, why don't you take that one first?
Okay. Well, I'll give you a specific example. I mentioned that we use a payroll company. It's a cloud-based application as well. And so what we have an integration with that, so that helps. So the employee records in that system are directly integrated with the employee records in Intacct, which contain their pay rate, for example, and the type of pay that is, whether it's exempt or non-exempt. And so Intacct is accounting for the cost in the same way that system is. But when we actually process a payroll batch, it goes through that reconciliation process, so that we're double checking to make sure that the numbers that Intacct has produced match the numbers that UltiPro has produced, and that process is thankfully very, very streamlined. And so you're taking bunches and bunches of data and confirming it all quickly. And so those are huge benefits in having integration on the one hand, and then systems that you can pull the data and reconcile it quickly.
Yeah. Good. That's a good experience. Andrew, do you have to work with disparate systems in your environment, and what do you do to get a level of comfort that's good enough for you?
Yeah, we have all disparate systems.
All right.
Yeah, our payroll is a disparate system. Our banking is a disparate system. So it is all upload templates into Intacct to get all that data in there. It really just comes down to having a really lock-solid process for that, and a good reconciliation process between the two systems. That's why I talk about things like bank recs, payroll reconciliations, things that auditors typically look at. And if you have, it should be done even if you have automated systems that put them together, but even more critical when you don't.
Yeah. No, thank you both. So both of you had mentioned having the right processes. You talked about reconciliations. So if you gave your assessment of your processes today and the system, the Intacct system that you're using, and this question is for both of you, did you feel that you were able to really create the processes you want to have around the system? Like, did they support each other, having the system and the processes that you wanted to have?
I'll start off.
Yeah, go ahead, Israel.
Yeah. My answer is definitely yes. Because of the way that you can, for example, create custom fields and custom rules, that brings a control and a tightness to what you can do. So if you have sort of a reconciliation process, but the stock Intacct fields is not exactly what you need, which sometimes is the case, then you can add that custom field. So again, to make it concrete, we have a custom field added on every employee record that is the payroll system ID number, so that when reconciliation is done, it's very fast. You can pull that data, pull the data out of the other system, a simple kind of VLOOKUP and cross-check the numbers, and boom, that's an example of how the Intacct system, to me, has been able to leverage that to make the process of the reconciliation quicker.
Excellent. Thanks, Israel. Andrew, how about for you?
I think Israel said it really well. I'm not sure how much I could add to that.
Okay.
I think Intacct has never hindered a process. I think the fact is Intacct has a lot of abilities, and you want to make sure that it's like we're going to go back to that fixed asset subledger, right, or the prepaid subledger, and using those things. The accounting softwares can do what you need. It's a question of how much do you need it to do, and how much work is there versus the offset, right? And so I wouldn't say I've ever been truly hindered by it. It's more of a question of, do we need it or not at this given time? And as you continue to evolve and grow, then you start to need it more and more. Yep.
No, that makes sense. One question from the audience that came up, and this goes back to the earlier topics about the close process. And the question is, and this one I can, if either one of you want to address it, go ahead. Do you find that most organizations record prepaids and accruals at year-end in preparation for the audit and not during the monthly close process? Do you find do they cut back on time if they do it once a year as opposed to every month?
I would argue. Oh, go ahead.
Yeah, we certainly don't do that. I don't find I've never seen an organization not do prepaids and accruals on a monthly basis.
Okay.
Simply because of the fact that unless you're so automated that those prepaids and accruals would be, well, first of all, prepaid should always be done on a monthly basis, because otherwise your accounting is going to be a total mess at year end. But accruals, unless your accruals are so immaterial that during regular months and you only have giant bills at year end or things like that, you're not going to be able to have a good trending of what your actual expenses look like on a monthly basis, which I think is pretty critical to be running a business.
Yeah, makes sense.
I would just add that, I mean, to me, it's a sort of a bit like keeping your room clean. If you let it just get into a complete mess, it's going to actually take more time to then clean it up than it would be to just sort of keep it clean little by little.
Agreed. Yeah. Agreed 100%. Yeah.
Great analogy. Thank you both. Okay, let's move on. So we've talked about the close process. We've talked about audits. Now we're going to get into a slightly different topic. And you can probably guess from this poll question, which I'd like to ask the audience. And the topic that we're eventually going to get into has to do with reporting. But before we do that, I'd like to ask everyone in the audience if they can please answer this poll question. I am confident in the numbers that are being shared with executives and business partners. So if you can please give your answer, we'll share the results with our audience in just a moment. And let's take a look. And wow, that's a very distinctive percentage. 90% of you are confident that the numbers are being shared with the executives and business partners. You have the confidence in that. Congratulations. That's a great place to be. And I can imagine when you're not on that end, that it can be a pretty stressful environment. So that brings us to our fourth question. When it comes to reporting, at Sage Intacct, what we usually find is that before companies become customers and move on to our system, the one word that is prevalent in their discussions has to do with spreadsheets. Oftentimes you hear that associated with manual processes, especially when it comes to reporting. So if either of you, Israel and Andrew, have been in this situation, again, either at your current employment or someplace else, the question that we think that should come up, especially when it comes to reporting, why are we relying on spreadsheets so much? So Andrew, why don't you take this one first? Your thought, they're thinking around relying on spreadsheets so much when it comes to reporting.
Sure. I think the basic premise of Excel is that it's incredibly flexible and allows you to do a lot of things as well as change things on the fly in a very easy manner. The problem with Excel is you can have errors. So what we try to really focus on is that Intacct is the source of truth with regards to actuals, as well as source of truth once we've finalized our forecast, which we do in Excel, we upload them into Intacct, so that becomes a lock source of truth as well. So what we tend to get out of in Excel is downloads from Intacct, which we then manipulate into a slightly different reporting form, because my boss isn't going to want to see it in the exact format that Intacct's spitting it out in, and that's nothing wrong with Intacct. It's just that you got to make it pretty. Put it in PowerPoint and do all that jazz for board reporting and things like that. So that's kind of how we see it. It's really more about taking the outputs from Intacct, using those as the lock source of truth, and making sure you're developing models against that.
Excellent. Israel, how about for you? What goes through your mind when you see this question?
Yeah, I think for formatting, I really like the flexibility that you get, as Andrew said, in formatting, in some of the charts and graphs and things they can do quickly with a lot of versatility in Excel. Having said that, I do have a monthly report pack or report group, it's called in Intacct, that I run, and I love that ability to do that because it makes creating those reports they're standard, they are consistent, and running them all at the same time, and you get that report pack and you send it out. I also use that, so I use a little combination more so Excel when I'm doing something a little more ad hoc, sort of addressing management questions and things like that, and more so the Intacct kind of report groups to do something I'm repeating every month.
Yeah, no, that's a great thing to hear. So while we're now also on the topic of reporting, given that you're both using a system that shoulders a lot of the work when it comes to reporting, can each of you talk about the kinds of reporting that you use today, not just for your consumption, but maybe in terms of some of the leaders outside of finance who rely on information? Israel, why don't you take that one first? Can you spend a little bit more time talking about reports, maybe from some of the project-specific ones? What is that environment like for you?
No, I mean, that has been a huge benefit for us since implementing Intacct, because what our management team, our operations management guys can do, and gals, is go into Intacct themselves, very self-service, and run the reports that they need to get information and questions answered without coming to me at all. So it's created that self-service platform. It's cloud-based. They're out wherever they are. They go in there, and I can then create, for some of them who are dealing with certain particular situations, I can create some custom reports that enable them to kind of handle that. And then I have some kind of basic reports that a lot of them go in and use. And again, it saves me a lot of time. It makes their work more efficient. And sometimes they will pull that data out into Excel and then do various looking at it in different ways, but the data is coming from the reporting engine in Intacct.
Great. Andrew, how about for you? Can you you mentioned the source of truth. What are some of the ways you've seen it be a benefit to other people in your organization?
Yeah, I mean, primarily, just to be clear, we use Intacct as our financial source of truth only. We're not aggregating metrics or doing anything else in that. And that's because primarily our business metrics are not exactly financial metrics. So there's not exactly a P&L driver associated with our business metrics, because we run a SaaS licensing business, and now we run effectively a digital consulting business for Cigna.
Right.
And so it is kind of two separate things and two separate environments. What I tend to focus on is the ability to do detailed department reviews and be able to walk through budgeting and forecasting with department heads for their individual budget, and that functionality is incredibly powerful in Intacct.
Yeah, no, that's great. One last follow-up question before we move on. And if you think back to your experiences, and this follow-up is for both of you, I mean, clearly I have a finance background too, and we all love Excel. I don't think that there's any denying there. But we know that there is a need for it. How do you, when you see a situation where you see Excel being used and you really think it shouldn't, but you know why people on your team like to use it, how do you actually go about making that change when you know it's not a good idea, but it has to be done?
I'll take a stab at it. I've seen folks doing things in Excel with good reasons that they were doing it. They didn't have anything better to do it in. And what I've done is tried to kind of work with them and look at how could we maybe do that in Intacct, because what the benefits are is you can build in the rigidity, so the control to the data, and kind of protecting the data, if you will, and also accessibility of the data. It's Excel. I mean, you can use SharePoint and various different things and Dropbox and whatever, but there's so much vulnerability to that, and it becomes duplicated, a bit like sort of the telephone game. It goes through one iteration, and then somebody else has some other version of it, and it kind of gets lost and degraded. And so what we have done is bring a lot of things that, say, the safety group. They were tracking various things about FRCs, when FRCs are issued, and how many so-and-so got and what size they got. We actually put that custom fields into Intacct with the employee records and said, you know what, store it all there. And now you can report on it. And as well, the people who are needing that data can report on that without going through you for it. And that's just a concrete example of how we can transition some record keeping that was done in an Excel sheet to Intacct.
Yeah. No, great story.
I think,
yeah, go ahead, Andrew.
Prepaid expenses is a great example, right? That's a good example of, I think when you're talking to people about Excel and you're like, we really shouldn't be doing this in Excel, you're going to have to give them something that really saves them time, at the same time, right? Because if you're not going to make their lives easier by doing it, it's going to be very hard to make that change. And the big reason of not to do things in Excel, like Israel mentioned, is because of the inherent lack of institutional controls in the system, because it is so flexible. So I to focus on things like the prepaid module and how do we get that in and make it easy so that prepaids are a very simple process for the month. And hey, look, now you don't have to manage this crazy prepaid schedule and worry about errors and worry about all these entries that you would make. And that's kind of where I come out on it.
No, that makes sense. There's a comment that came in from the audience that Excel, it's pretty darn handy when it comes to doing forecasting. And I know forecasting can mean different things to different people. But when it comes to doing some of the data entry and rekeying, there can be some mistakes. But it seems like when you have things that might be more, let's say, calculation heavy, there could be a reason why you want to have that balance. Would that be similar to what you've experienced? Either of you?
Yeah, I've definitely had situations where the amount of different types of calculations and things that you can set up in Excel really help. But I use it kind of as a pass-through more. For lack of better words, it's sort of an intermediary. So something would use Excel to kind of process something, and then just don't store it there. Don't let it be your primary source of kind of that's the record and that's the database, so to speak, because it's a bad database.
Yeah. Yes, it is.
Yeah,
okay.
And like I think flexibility of forecasting in Excel is just never going to go away. Even when I was at Disney for 9 years, we put in a Cognos implementation of a consolidation system, and it was built such that people could actually do their forecasting in the system if they wanted to, but they all just did it in Excel and then replicated it into Cognos. Because you're fighting a losing battle on that one.
Yeah. No, that's I've heard that more than once.
As long as you can get version control out of the finance and accounting system that you've got, there's no issue with using Excel to forecast, in my opinion.
Yep. Great. Thanks. Thank you both. Let's move on. There's one question from the audience that I'd like to ask if it applies to either of you and see if you can address it. And the question is, do any of you provide services where you have to work with contractors who have to submit their time due monthly? And if so, how do you close quickly if your contractor information comes in 3 to 4 weeks after month end? Have either of you been in that situation or have to do something like that right now?
You're talking about contractor billing?
Yes, contractors who work internally. Mm-hmm.
Right. Well, I think so. an important part of control mechanism, right, is when you have a contractor, you know what they're doing up front before they're doing it. So there shouldn't be a lot of surprises on that end in terms of being able to accrue, fairly well on the contractor side.
Got it.
I do find, I'll tell you, the worst person we have, or the worst vendor we have in terms of getting accruals right is legal, third-party legal. They are just so slow and so bad about giving you proper estimates. And so that is the one thing that can really hold us up and really show errors month over month is legal accruals and reporting.
Wow. Good to know. Okay, let's move on. So the last question, and when you look at the photo here, it's not specific as to who this photo is supposed to be describing or what role in the organization. But the last question is, if we think about the CFO-controller relationship, when will you be able to finish the other assignments that I've asked you to do? And then the reason why we want to have this question here is because from an industry trend perspective, we continue to see that roles are evolving at the leadership position as well at the lieutenant or mid-manager support level position. And so as these roles evolve, some of the asks, they may not be the same as they used to be maybe 5-10 years ago. So Andrew, why don't you take this one first? When you think about the other assignments that need to get done, what goes through your thinking as you try to address this?
Yeah, so I have a bit of a complicated role because in addition to being CFO, I own HR, IT, facilities, tax, and security and compliance. So yeah. I have this problem. And because I have this problem, what I try to do is make the finance and accounting functions run evenly across the period as much as possible, try to smooth out the peaks and valleys as much as possible, such that you can, it's never a question of when will you finish the other assignments that I've asked you to do. It's more a question of how much time do we have allotted in a given day, and how do we make that time as efficient as possible to do the different tasks that need to get done. So, one of the things about that is making sure that you aren't waiting until the end to do things, making sure you're doing things evenly over time, and I find that is one of the biggest changes that I've instituted when I've come into an organization is making their workload more even over the period such that they aren't having these giant peaks and valleys at close and reporting timelines.
Yep. Excellent. Thank you. Israel, how about you?
One of the things that I've seen in my controller is a little bit of tendency to get lost in the weeds, or maybe a better analogy is kind of like the fly that bothers you while you're trying to eat your lunch versus the bear that eats your lunch. Right. The flies can be extremely annoying and they can really catch your attention. But what I try to do is say, pull back and look at the perspective here of this thing that you're kind of, spending too much time and thought energy on. It's just not worth that much time and thought energy. It doesn't have that big impact. So we try to get her to step back and look at the bigger picture and let some things kind of be ignored, and so that we address the things that are big. And that can be employees, that can be low-performing employees that can drag down overall performance, that can create kind of the human element of motivation issues and, a little bit of infighting and things like that. Those can be real problems that need to be kind of cut off quickly. Otherwise, they can sap a lot of energy and time.
Yeah, no, that's definitely true. One follow-up question I'd like to ask both of you because it's somewhat product related. So both of you have made some reference or allusion to time savings, being able to have a system that can help with time savings where it's needed. So one of the comments that we hear from other customers that use our system is that the time savings, they use the word free up. It frees up the opportunity to do, other things that need attention. So can each of you give examples of what you've experienced or what's been going on in terms of the time savings? So if you have realized time savings with Sage Intacct, what are some of the things that your teams were able to accomplish as a result? Andrew, can you go first?
Sure. I guess this is kind of a two-part question, right? One is, what are the time savings? And two, what do we do with that time?
Yes.
So I think one of the big time savings is the reporting and the ability to report quickly from Intacct. What that allows us to do is iterate in a much quicker manner than you normally would be able to do, and actually, because of that, close much faster. So it's not like, oh, okay, I'll go put this in and wait, 5 hours for some report to spit out or anything like that. The real-time reporting nature of it and the detailed reporting nature of it that we can generate very quickly and easily allows for us to really, have a very quick, efficient review process and post-review process change to close. That allows them to not be worrying so much about the close as much as getting the numbers right for next month and the ongoing period.
Excellent. Israel, how about for you? In terms of time savings, what have you been able to accomplish with those time savings in terms of productivity?
Yeah, so definitely what Andrew said is relevant for me too, but I'll talk about a different area, and that is the integration of systems. So one, it's kind of an integration in the fact that we have an employee-facing part to it in our company where employees all across the country are doing direct input, primarily in timesheets, but also expense reports and purchasing requisitions and travel requisitions and things like that directly into Intacct. That creates an efficiency a lot for us instead of sort of some kind of request or some information coming over via email or some other system. It's coming direct into Intacct and then being processed by our team here. So that's very efficient. Also integration with outside systems, be it our payroll that I talked about before, also our safety management system, also our budgeting and planning system, which is done outside of Intacct, but it's integrated with Intacct. So the ability to do those real integrations, it creates a lot of efficiency. So for us, over the last 7 years, our transaction volume is like 150% up, whereas my team, I added one person. So that's a huge efficiency gain. And in some respects, I added more people by kind of outsourcing the work to employees to do more direct, input into the system.
Excellent. Thank you, Israel. Thank you, Andrew. That'll bring us to the conclusion of the session, and I'll wrap it up from here. So we are at the top of the hour, so if you submitted a question and we're not able to have it answered during the session, as I'd mentioned at the beginning, we will follow up with you to make sure that you are able to get the information that you need. And if you're interested in learning more, we offer a number of resources on our website, everything from a free trial for you to get hands-on experience of Sage Intacct to a variety of upcoming webinars. And feel free to follow us on Twitter and connect with us on Facebook or call us directly. And if you'd like to have even more interaction with us, take a coffee break with us, see a brief demo, participate in a live Q&A session, and we'd be happy to interact with you then. So I'd like to thank our guests today, Israel and Andrew. We hope that you had a very informative and productive time on this webinar. Thank you very much for attending, and we'll see you all next time. Bye, everyone.
Thank you very much. Take care, everyone.